Hello, and welcome back to Analyze Asia, a podcast dedicated to dissecting the pulse of business, technology, and media in Asia. I'm your host, Carol. Last episode, we talked to Joseon from South China Morning Post as CMP on China's 2 sessions and its plans for the next 5 years and beyond. We'd love to hear what you think, so don't forget to find us on Twitter and leave us a comment. And this week, we've invited 2 old friends of the show, Nadine Fresischlad and Jon Russell from the Ken, to join us and talk about an exciting piece of news in the Southeast Asia tech scene, which is the record-setting Grab SPAC. First of all, welcome back to the show, guys. Now, Nadine is a writer for the Ken, and Jon is its Southeast Asia editor. And the last time that Nadine came onto the show, it was last September, and you came here to talk about the tech scene in Indonesia and its influences by US and Chinese tech giants. And I know that Jon last appeared last July, almost a year ago, to talk about Gojek versus Grab. So today's conversation on Grab is a natural continuation of both of our conversations. And you know what? I think it's been a very long time since I had a 3-way conversation on the show. So I'm very much looking forward to this spectacular discussion. So before we start, which cities are you guys located in right now, and what have you been both up to since last appearing on the show? Ladies first.
Okay, sure. Yeah, so you said, last time we spoke it was September, and I think since then, obviously, still writing, staying home most of the time. But I actually did a very sort of pandemic thing. I moved to the countryside. So when last we spoke, I was still in Jakarta, and now I'm actually based outside of Bandung, which is, a city 2 hours from Jakarta, but I'm in the hills around Bandung. So that's been quite a change for me.
That's so nice. I wish I could say the same. What about you, Jon? What have you been up to?
I'm based in Thailand, so I'm usually in Bangkok, but I spent the last 3 or 4 weeks in the middle of Thailand, actually. So I haven't permanently moved here, but it's like a place where my kids are off school, we sort of come here. I think there's a bit of a pandemic outbreak happening at the moment in Bangkok, so for the time being, I'm here, but I'm sure I'll be going back home at some point.
I'm not sure where our listeners are, but I feel like they might be going through a similar journey with all of you. There's still, a lot of exciting things happening, and I guess we're all just adjusting the way we work and live. Same thing with our conversation today. We are all in different cities and different countries, and I heard this Grab SPAC also was facilitated very much virtually. So let's get started. But before we start talking about, Grab's $40 billion valuation SPAC, so let's talk about what we know from before. We knew that through Uber's S1 form, which was filed a few years back, that Grab has to go public by the year 2023. And so going public for Grab has been on their roadmap and on our radar for a while now. So let's first help our audience, understand and let's set the scene. So first of all, what is a SPAC and how does it differ from a traditional initial public offering or IPO?
I mean, just to circle back on your previous comment, Carol, when you said Uber kind of nudged Grab onto its IPO journey, and I think maybe, Uber and Grab merged in 2018, and since then, for sure, Grab has had that plan to go on an IPO route, and I think in the beginning it was the plan to go for a traditional IPO, and then COVID happened and this SPAC frenzy happened, and I think the urgency to go public just became stronger. So the SPAC was a way to just accelerate that timeline. And yeah, to your question, what a SPAC actually is, I mean, the way I would explain it is it's just a mechanism to take a company public without going through the traditional IPO process. And the advantage of that is cheaper, associated with less fees, and that the companies involved do not have to do as many documents, as many filings to go through with it. And the way it works is you have one company that's called the blank check company, or some other jurisdictions also call it like a cash shell, that basically does the IPO first. In this case, let's say in the US, and then the company that's already public identifies a target company elsewhere, in this case in Southeast Asia, and says we'll go through a merger. And then once that merger is completed, the target company becomes the listed company. So you have made a company public without going through the IPO itself. Did you want to add anything to that, Jon?
No, I agree. I mean, as reporters who focus on Southeast Asia is a new thing for us, right? So only in the last probably like 6 to 9 months that we've begun to understand what it is. But yeah, I think for Grab, like there's a couple of things like Nadine said, like it's just a faster way to get to market. And I think at the moment the market is good for tech companies, right? Based on the kind of growth that you've seen in the US and other places. There's a certainty about when you go public. So there are a lot of the issues that companies have and investors have is when you go public, you have to choose the share price that you're going public at, right? But basically once the doors open, the price can pop. And so there's, for example, if the company's share price, you want to see a decent pop. So you want to see a decent growth of the share price when the company does list, because obviously it shows that there's positivity in the market. It allows investors to exit to some extent too, right? But I think that the danger is that, I've seen this a lot in the market right now, is that it's hard to gauge what that pop looks like. And if the pop is too high, then people will sort of think that the company listed at a price that was too low and so left money on the table, right? If they listed at a higher price, they could have sold more shares and so on. Or they could have made more money from the shares that they'd sold. And I think one thing about the SPACs, as I understand it, is that the valuation is set because there's no IPO process. There's actually the sort of pop isn't as extreme for a SPAC company as it would be for like a regular IPO company. And I suspect, and I don't know this for sure, that one of the benefits for Grab is that they got to essentially like agree what their valuation was before they went public. And so I think that's one thing also from SPACs that in this case made it the route that Grab took.
Thank you for your explanations. It really gave our listeners an insight as to why certain companies would want to go through a SPAC versus a regular IPO. And just in case you don't know, SPAC actually stands for Special Purpose Acquisition Company. So now my next question is, which U.S. entity is Grab merging with and who are their backers or sponsors?
The SPAC that Grab is merging with is called Altimeter Growth, and it's part of, or was started by, Altimeter Capital, which is, a well-established firm in the US, an investment company headed by a guy called Brad Gerstner. I personally didn't know much about Altimeter before this deal with Grab came about, but I think if you look up what Altimeter is known for, it was involved in the IPO of Snowflake, which is, a big data storage company, I believe. And it's also been involved in another couple of blank check mergers, such as for a DNA testing company called 23andMe, which you've probably heard of. So it's, a reasonably well-established, well-respected, successful investment firm that just happened to be interested in the opportunity for a SPAC with a Southeast Asian firm and found a good target in Grab, I think.
I definitely agree. I think the hard thing about SPACs is knowing what the merging company is, right? And it certainly seems that they have a very good reputation, albeit mostly with US-based investments, but their kind of speciality is taking companies to IPO. So I think if you're looking for a good steward to help Grab go public, they'd be one of the ones that I would think would be quite high on the list.
And both of you talked about, what are some of the advantages of going through a SPAC, but what are some of the potential problems for going this route or problems for this company, with the Grab SPAC?
Yeah, I mean, from my personal perspective, I think we're going to find out because I think Grab is certainly a unique company going to SPAC, right? I think if you look at the examples in the US, I'm sure your listeners know that there's a huge increase in SPAC, and I think Virgin Galactic being one of the more higher profile companies, right? They've mostly tended to be US businesses, and so Grab is really a step into the unknown for a lot of people, right? We don't really know. There's not many companies from Southeast Asia that are listed in the US anyway. Obviously, Sea, the Shopee and Garena parent, is the most high profile and, a great story in terms of the growth that it's seen in the last year and a half, probably. But I mean, we don't really know what's going to happen with Grab. And so I think, especially with SPACs, right, there's not a huge, as far as I'm aware anyway, there's not a huge sort of history of many SPACs going to market. So I think I've been reading recently that there is a concern that growth in SPACs is going to come back to haunt investors at some point. There's SPAC fatigue or whatever you want to call it, right? There's kind of too many deals that are going through. So I think from personally, I'm quite curious to see what happens. I mean, in theory, it shouldn't be a big issue because once a company is public company, right? You judge that company based on the revenue that it's seeing, the kind of growth that it's seeing. So in theory, like Grab shouldn't have an issue once it goes public, as long as the numbers and the growth that it's seeing kind of justify the share price and the overall valuation the company gets. And it shouldn't make a big difference, like the way that it gets onto the public markets, at least as I understand it anyway.
No, I just wanted to add, because you asked about the potential downside. I think, part of the reason why SPACs have become so popular is because for the most part, especially for the investors themselves and for the founders, there isn't really like a big downside. It's a more sort of controlled and more managed process than if they were to go through a real IPO. But maybe one risk that I see is that maybe it's a little bit early for Grab, actually. The timeline that you mentioned earlier with agreed upon with Uber was like before 2023. So also in terms, if you compare where Grab is at now with where Uber was when it, itself went public, Grab is still actually quite immature. So one risk maybe that I see is that jumping on this back bandwagon now, maybe, Grab could have waited another 1 or 2 years if the conditions were a bit different.
Interesting that Jon mentioned C, because Altimeter also actually counts C among its holdings. So we know that Grab and Altimeter have released a selection of documents that reveal the state of their various businesses. I'm sure you've read some of these documents. What are some of the most interesting findings for the both of you?
I got to shamelessly promote the story that we did, right? And I guess that's why we're here, right, on the podcast. Not to promote the story, but because we did that story, right? So we kind of crawled through data. I think there's a lot of, I'd say like it's not usually when companies go public, right? They open up their books and you get like incredible amounts of access to numbers. Talking about like hundreds of pages of in-depth kind of data. This didn't really happen, I don't think, with Grab, and it was weird. It was like a kid-friendly document, right? It wasn't particularly long. The fonts were really nice. There were charts in there. It was kind of like a accessible doc, right? I think in terms of the numbers, perhaps Nadine, you might want to go talk about that a bit, because I know that you went through them in a bit more detail than I did, right?
Did I? I think we both kind of pored over numbers quite a bit, but the question was which interesting takeaways were there. So, to me, I think there wasn't like a huge surprise, but just seeing, how the different verticals stack up against each other. And the surprise a little bit there for me was how little the financial services arm still contributes. I know it's still very, very early days for Grab and its financial services. Even in the projections that it provided in that document, which go for the next 3 years, I believe, you can still see that even, from Grab's most optimistic projections, the financial services remains fairly small compared to other verticals. And it's interesting because actually a lot of Grab's story and the valuation that it has now hinges on this believability that it's actually more than a ride-hailing and food delivery company, right? So I think in the next couple of years, that's where it's going to have to prove itself the most.
Yeah, that's true. And I think that feeds into what you said, right? That maybe they could have waited a bit longer. I think that's interesting. I don't have any insider information, but you do wonder why, if Grab had waited, could have waited a little bit longer, whether, they could have shown a bit more growth. The financial services play is very, very nascent. It's much more about like what we would like to do, right? Whereas they haven't got much evidence of it yet. And so it does make you think, like, were they forced to beyond the Uber agreement? Was it that they couldn't really raise any more private capital? They've raised so much money anyway, right? More than $10 billion. It does make you wonder, like, why they couldn't have sort of waited for the financial services play to sort of bloom a little bit more, because then it would have given investors a bit more sort of certainty. Whereas I think right now the numbers that they released, as Nadine said, like, they don't really show the financial services business doing that much. And I think that's a critical piece, because if it's going to be more than just the Uber of Southeast Asia, they really do need to be able to show that they can do financial services in a meaningful way. And I don't think the numbers which Grab released, which were clearly like very cherry picked, right? They didn't, even those numbers which they'd selected very carefully, didn't really, make that point, which is quite interesting, I think.
And apologies, I should have mentioned this earlier. The reason why I invited you two, especially here today to talk about this topic, is because you co-authored, this article on the ripple effects of Grab's US $40 billion record SPAC listing, which is available on the Ken for our listeners who are interested in reading more. It's because you poured over these documents across the different business lines. Where do you think the growth engines will come from? Given the low margins for their mobility business and the amount of subsidies needed to keep all the drivers on the Grab network.
I mean, I think that, ties back in with what we were speaking on earlier. I think financial services will eventually have to come through as something where Grab can demonstrate a growth engine, not in terms of just top line growth, but also like profitability. What we do see is that its mobility business is actually, in terms of profitability, the healthiest at the moment. Food delivery itself is still generating a lot of revenue, but also is still, a sector where Grab's bleeding. So yeah, I mean, I think that's still a big question mark. What will actually be the growth engine of Grab? And in that way, it's quite different to the way that Sea is set up.
Yeah, it's true, but I think it's really hard to call, right? I mean, if you're looking at Sea's business, I remember when they went public, 2017, right? Their stock price stayed really, really low for such a long time, maybe like 18 months or maybe even 2 years before Shopee began to show the kind of growth that, got people excited. And I mean, Grab in a very sort of bullish case could be that similar company, right? They could, their delivery business, like the rides business and the food business could generate, I think it's $1 billion in joint profit is what they're predicting, or at least based on those two units, so not overall profitability. But they could both generate like $1 billion, I think it is, for Grab in the next couple of years on an annual basis. And then that could, in theory, be money that goes back into the financial services business and helps that to grow, with the longer term goal of that being a business that could, I guess, be a lot more profitable without having to inject, so much cash. Because I think that food and rides, as we know, is very dependent on sort of two-sided promos, so promos to users and obviously to the drivers that are going out there. And in the case of food, also the actual restaurants that are making the food. So I think financial services is probably what they see as, it could be a much more lucrative business, but as we've said, like there's no obvious sign that's about to happen. So it's very much, I guess, a bet that investors would have to make at this point based on not much information.
The other company that Grab is often compared to, at least loosely, is food delivery company in China, Meituan. And I believe Meituan makes most of its money, and it's been profitable with food delivery. And I think it makes its money through the sort of internal advertising network mostly, if I'm not mistaken. So just, having a huge network of merchants who are using the platform as a means to advertise and promote their services. So I do think, that's a business model that Grab's also striving for.
And we started our conversation with a mention of Uber. So we know that, Uber has about a 27% stake in the company. So I'm quite interested in how do they stand to gain from this Grab SPAC? What are some of the upsides and impacts?
On paper, at least, they've done really well, right? They did have 20-something% when they did exit Southeast Asia as part of that agreement, but that has been diluted down, with subsequent fundraising for Grab and obviously this deal. So I think it's something like 16% is I think their stake as a percentage, but as the valuation that Grab has been given for this deal is, I think, like about $6.5 billion, which Uber had said before that they'd spent around like 700 million in Southeast Asia. That was their estimate for what they'd spent, right, when they'd exited the region. So in theory, like, if you take them at their word and they spent $700 million, then, they're almost 6 billion up based on this Grab SPAC. So I think it was a very smart deal at the time, because they didn't really concede so much as they just said, well, this company is obviously in a better position than us. I think Uber was warming up for its own IPO, so had to cut some costs that weren't quite core to them. And I think, for them, it's obviously a great position to be in. They could, in theory, they could sell some of their Grab position to generate cash. They could leave it for a while and bet that Grab is going to grow. Or I guess they could, in theory, it could be a play for them if they wanted to, for whatever reason, get back into Southeast Asia, they could also probably buy back into Grab's business. I mean, that seems less likely at this point, but with a decent chunk of the company, I guess anything's possible, right?
I would just agree. Uber really had a good instinct here, I guess, and it looks like it's panning out for them.
So sometimes I guess a step back is indeed a step forward. So who are some of the other investors from Grab's, earlier rounds other than Uber that will stand to gain?
I mean, SoftBank's the big one, right? I think they have like 20-something%. And then a bunch of other investors, Didi, Toyota. Given that Grab raised so many rounds of venture capital and private funding, there are a lot of people who stand to gain.
I think the interesting part is there's some early investors in Southeast Asia that stand to do pretty well. So I think 500 startups in particular, they had a pretty good link with Grab. And obviously Grab being founded in Malaysia before they moved over to Singapore. And Malaysia is where, one of the 500 startups founders is from Malaysia. So they had the very early deal access. And it's kind of ironic because 500 startups have done so many deals, across the early stage. I mean, basically, like in many ways, they've sort of spread bet on Southeast Asia, writing very small checks for a whole bunch of companies. And I think like this IPO, I haven't checked the numbers, but I imagine it would probably return one of the first funds that they did, if not more than one fund. And they also have some other companies that are, apparently lining up to do SPACs too. So it's kind of ironic, right, that they've invested in a whole bunch of companies and a lot of very small businesses got their start from 500. And then they're also going to be like one of the major benefactors of this Grab SPAC and potentially some from other companies too.
I think that's their strategy, right?
If we mention 500, we would probably also mention East Ventures, right? I think they were also involved in one of the very, very early rounds. So yeah, it's definitely probably the first major exit in this scale for a lot of these early stage investors too.
Yeah, and I think that's amazing because it really does show LPs and other people that there is potential in Southeast Asia. So obviously like SoftBank is the real winner, but I mean, they've already won so much from other IPOs like, Coupang in Korea and a bunch of others. So for them, it's just more money to pile on. But I think the interesting part is the early stage guys and, whether it starts to sort of lure folks from outside of the region to investing for the first time in Southeast Asia because they might be able to find the next big thing.
I think you kind of answered, my next question. But what is the impact of the SPAC towards the Southeast Asia market as a whole, specifically, to the startup and the VC ecosystems? Because we hear a lot of these investors in Grab's earlier rounds or a lot of these, Asian funds investors. And also we mentioned Sea Limited recently, their market cap also have gone above the $100 billion mark. And then, of course, there's the Gojek and Tokopedia merger we all know about. Yeah, if you want to comment more on this Southeast Asia tech trend, how does that impact the entire tech scene there?
Well, because I think we could do a podcast on this topic alone, right? It's probably like an hour's worth of conversation. I mean, there's so much, right? Obviously, I think there's already funds that are moving into Southeast Asia, actually from outside of the region based on Grab. And I know it's such an obvious signal, right? The world's largest SPAC. There's a huge tag that goes with that, but it's a good way to get interest. So a bunch of firms who are not in Southeast Asia are already actively doing deals here. That's obvious, right? Because, you follow the money. I think the interesting part is very much the early stage stuff. So potentially there's employees who work at Grab who've got a decent amount of stock. What they do with that, when they sell that, do they leave Grab? Do they start, doing their own angel deals? Do they start their own firms, their own funds? I think there's a lot of potential. This is what built Silicon Valley, the virtuous cycle, right? People go work for companies, they get stock, they get an exit, they put that money in again. And I think this is the first time that we've really seen that in Southeast Asia. I think the Sea IPO wasn't that because they didn't really give out stock to lots of people. I think a lot of senior folks have made millions from it, probably tens of millions because the share price has done so well, but it didn't have the same kind of halo effect, right? It wasn't like rank and file people were getting equity. I know that Grab doesn't give out equity like it's candy. There are some limits, but as far as I know, a lot of people with sort of mid management upwards could do quite well out of the IPO. And potentially if Grab does what Sea did and grows even further than the obvious multiples, then you could start to see some different kind of money going back into the region. I think that despite having some very good investors, we don't have serial founders don't exist here as investors yet. And so I think like that's the exciting part for me is potentially you could have, you know, folks who've worked in the industry who start their own funds or are a bit more active with angel deals, or who, you know, they've gone through the Grab process and they think to themselves, actually, I want to start my own company. And I think it's happened to some extent with some Grab and some Gojek kind of folks. That effect is going to be much greater after the IPO, I'd think. Sorry, that's a very long answer, but I think we could talk for hours on it anyway.
Understood. And I guess we'll have to, you know, look out for the Grab mafia in a few years. And that's the ripple effect that you write about as well, right?
Yeah, and I think, I mean, you hear about it now, right? People saying there's a Grab mafia now. I don't think that there is at the moment. I don't think it really exists yet. Because I don't think that people who've worked there and who've left, who are these so-called like Grab mafia people, they weren't there for that long, and they didn't, you know, ride full way. So I think that you're absolutely right. Like now is a time you can really say there will be like Grab mafia and Gojek mafia and Tokopedia mafia and all those other companies that hopefully also follow Grab's pathway to going public.
And you mentioned Gojek and Tokopedia, so they're probably going to merge into Goto, and that will likely happen within this year. So Grab's key war will still be in Indonesia. So what do you think that means for the competition in the Indonesian market?
You know, I think like it doesn't really change anything about the competition in the Indonesian market. I think it's still on, and it still kind of feels like it's early days all over again. So I think with Tokopedia and Gojek, you know, they'll actually be in quite a tough position. Going through a merger takes, you know, time, resources, maybe. It's not that easy, right? And Grab is already strong in so many areas. It's surpassed Gojek in some regards. So it's going to be really tough for Goto, which I still have to get used to saying. It's not just Grab and Goto.
Is it Goto or is it Goto?
No, it's supposed to be Goto, I guess. But we'll see.
Gotcha.
And it's not just Grab and Goto, right? It's also Sea is like the third strong player at the moment in Indonesia, and they've already surpassed Tokopedia with their e-commerce platform Shopee, and now they've started, you know, really catching up on the payments side. They've started going into digital banking and even food delivery. So yeah, I think with the presence of Sea and just given how much, you know, how strong and how much cash Sea has, it kind of feels like the competition is only just starting over again in Indonesia.
So you don't think the competition is going to be any easier, that, you know, Grab will still need to bleed to win market shares in Indonesia?
I believe so, yes. It's definitely not going to be like an easy ride from here on. And whether that's, you know, Goto or whether that's Sea, they'll still have to fight for their share in Indonesia for sure.
I think, just to add one more thing, but I think that the irony is actually it's a very different position, right? Because if you look at Sea, like investors have cut them a lot of slack because they've grown so much. I'm sure they're spending a huge amount of money in Indonesia and eventually in other markets to sort of grow their business. And usually as a public company, right, you want to see your company grow, but you also want to see that they can be profitable. But it feels like Sea's earned so much goodwill from the market that actually they've cut them a lot of slack. I just wonder if Grab and Goto and others, whether they'll have that same freedom, and whether, I don't know the numbers that Grab are going to be releasing, but whether they will be under pressure to be profitable, and whether they're going to show the losses that they're making in various different countries that they're in.
One interesting fact that I noted is that, you know, Anthony Tan, one of Grab's co-founders, has about 2% stake in Grab, but holds 60% of the voting shares on the board. What does that mean for the shareholders and for, you know, the employees overall?
I think it's kind of typical for the way tech companies nowadays go public. You know, they make arrangements so that the founder can still stay in control. And I guess everyone involved believes that it makes sense because the tech environment is so dynamic and so fast, and it requires quick decision making. So they kind of allow the founder to stay in full control. I mean, in this Grab case, it seems quite extreme, but overall that the founder or management team gets voting shares or higher, you know, voting power seems to be quite normal at the moment.
Yeah, I think it's a norm, and I think if you look at Grab as a business as well, like Anthony Tan is like the father of the company, right? And he very much cultivates this like family approach, and like he's the sort of patriarch. So I'm not massively surprised, to be honest with you. And I also would guess, and again, this is just my hunch, that these are conditions that doing the SPAC deal has made this more possible, right, than having to go on a roadshow and pitch it to investors. Because I think Altimeter backs Grab in terms of the SPAC, And I think that's the most important thing. So I think if they're on board with it, then I think it sends a really good signal to others. So I would think that that's also one of the reasons why that Grab has gone down the SPAC route, is that he can retain that sort of voting control that would be much harder to do otherwise.
Is he like the Jack Ma of Grab?
I guess, yeah. Well, I guess we'll see what happens afterwards, right? Because Jack Ma's story really, only began with Ali, right? And there was also Anne and other stuff too. So wait and see, right?
And that's my next question. Where do you see Grab's future lie, beyond the SPAC?
I can just say briefly, I do think it's interesting. I think nobody obviously has the answers, right? But I think Grab has been too big to fail for some time, if you think about it, because the investors that they have are huge. So getting to IPO is going to be the first real test, right, of public markets. And I think it's tough because I think if you look at Sea, has had such an outstanding run in the last year and a half or 2 years. Nobody really saw that coming, that it would grow to be, $120 billion company. I don't think that anybody could say they really saw that coming. So yeah, I think if Grab does well, like we mentioned earlier, the financial services play comes through, the sort of bread and butter bits of their business can be profitable, then that will put them in a good place. And I could imagine that given Sea is priced 4 times higher, or the valuation is 4 times higher, that there would be room for Grab to grow. But I think it's too early for us to really know, because the more detailed numbers aren't really out, so we can't really pour through Grab's business in that much detail at this point, right? So I think, yeah, unfortunately, I'm going to sort of pass on that answer and say we'll see.
Yeah, I mean, some of what Jon said, I would underline that in some ways Grab is a little bit too big to fail. It's at the moment just, the only other major tech company from Southeast Asia that you could invest in through the public markets, and maybe that alone will kind of, make this a success story. But yeah, in general, a lot of this is just basically a collective belief in the future of Southeast Asia and the role that tech companies will play in this future of the economy. So, and Grab is definitely one of the, important companies on that front. So I think, yeah, overall, I'm quite optimistic.
I think also what it's going to do is it's going to bring other companies into play also. So I think there'll be other tie-ups, right? Like you've seen, obviously Gojek and Tokopedia come together. There's no reason that, some crazy stuff that sounds crazy now, like for example, perhaps Alibaba sells Lazada, or Alibaba invests in Grab finally, or, I think it begins to open up options, right? It's definitely not end game. It's not like, Grab goes public and that's that. There's a lot more stuff that's going to start to take place now, right? So I think Grab itself is ambitious. I think that they will also look at other areas that they can get into too. So I think it's only just the start, really, and there's a whole lot of stuff that could happen both with other companies and within Grab's own business too.
Indeed, that is only the start. And I think that is one of the most exciting elements about reporting in the tech scene. I'm sure you'd agree that, there are always unexpected things happening, and, you see this one milestone, but really it's just the door to another great journey that we're only starting to embark on. So thank you so much to you both for sharing your insights on this exciting story. And our listeners, like I said earlier, if you're interested in learning more about the Grab story, you can go on theken.com to read the the article that Nadine and Jon has written. So to conclude our today's conversation, I still have one very exciting question for you both, which is, can you both recommend a book, a podcast, or something that has inspired you recently?
This is the hardest question for sure. I'm just really encouraged that there's a lot more media attention on Southeast Asia. So I think just in general, I'm able to read a lot more than say a few years prior, right? Which is obviously great for analyzing stuff like Grab and other things that are going on. So my kind of lame answer is I read around, I listen around. There's a lot more media, there's a lot more podcasts that are going on. So I'm kind of optimistic about where I guess media, and particularly business media, is headed in this part of the world. I think it's at least on par with the way that tech companies are also headed, which is obviously good.
yes, that's something that really excites me too. And I just wish, the pandemic situation would improve so that we can start to meet people in person again and talk about all of these great, exciting stories in Southeast Asia that inspires all of us, but maybe in person. And what about you, Nadine?
Gosh, I've been thinking about this, and I do, I binge listen to a lot of podcasts, but in terms of like discoveries or recommendations, I really like to listen to this series called Housework. It's with a therapist or like a psychoanalyst called Esther Perel, and she's speaking with just, not necessarily romantic couples, but just people who work together and how they've survived through the pandemic and all the conflicts and little coping tricks that they've developed to just make it through this time. And I've found that to be a quite interesting series that just takes me into the lives of different people. And yeah, check it out if you're interested in that.
Yeah, that is a very 2021 pandemic kind of a podcast, a recommendation. Thank you. And last but not least, how can my audience find both of you?
For me, probably best to find me on Twitter, where I'm at Freischlad. So that's Nfreischlad. And with my name, you can also find me on LinkedIn and add me. I'm usually pretty active there.
Yeah, I think same on Twitter, which is just my name, Jon Russell, and LinkedIn also the same. Yeah, I think we're pretty cliche journalists, and that's the social media that we use. But at least that makes it easy to sort of find us anyway, right?
Don't worry, because same here. You can find Analyze Asia on our podcasting platform as well as on Twitter, and we welcome all sorts of feedback. We love to hear from our listeners. You can find me on Twitter as well. You can just search Analyze Asia. That is Analyze with an S. So it has been a spectacular conversation with the both of you. Thank you so much for coming on, and I do wish to speak to you again, and maybe in person next time, somewhere in Southeast Asia. Again, thank you, Nadine, and thank you, Jon, from the Ken, for coming on to Analyze Asia.
Thanks so much for having us. Take care.
Thank you. Thanks for inviting us.